that. China's trade surplus rising to $10.63 billion in July after today's trade numbers were released. Also, China's factories continue to pump out products as industrial output accelerated again in July on record loans and stimulus spending. The number, though, was below the consensus economists' estimate for 11.5% growth year over year. All right, we have more charts. Urban fixed asset investment for the 7 months to July 31st also rose at a slower pace than economists had expected. Still rising, though, of course, up 32.9% in July.
It's certainly been impressive how quickly the stimulus money was put to work and the growth that's resumed in China. So it really is leading the world now out of the recession.
More data out. Retail sales came in above the consensus estimate of 15.2%. Economists expected about a 15% rise. Consumer prices. So here we have inflation numbers next, falling 1.8%. So we have deflationary environment persisting in China. More than economists had forecast there. Producer prices also dropping 8.2%. That was in line with economists' estimates. And Kathy, I'll update the other numbers coming up in the next half hour. Back over to you.
Okay, I'll see you then. Thanks for that, Steve. One final story to bring you on Asia's economy. We have confirmation this morning that Singapore's recession is not only over, but that it's grown even more than we were previously told. Revised figures this morning showed the city-state grew by 20.7% last quarter. One analyst says smaller Asian economies like this were always likely to bounce back first.
The amount of intra-regional growth of economies in Asia seems, at this point, it's hard, it seems to be enough, and their cash reserves seem to be enough that they can really fight their way out of this much, much, much more easily than the United States of America and Europe.
Singapore's manufacturing and service sectors help propel the nation back to growth. In other news, more than 50 people have been injured in a powerful earthquake on Japan's northeast coast. At a magnitude of 6.5, the quake damaged buildings less than 100 miles away in Tokyo. The quake is the second in 2 days to rock the Japanese capital. National broadcaster NHK Television says 52 people have been injured in areas near the epicenter. And that is not the only catastrophe Japan has to worry about. Tropical storm Ito is approaching the coast of Tokyo, though it is not likely to make a landfall. Coming up here on Global Connection, the end of easing or the start of tightening. I'll be talking to Chinese monetary policy with Morgan Stanley's Asia's chief economist.
And I'll be switching the focus to the other side of the pond as the man charged with officially deciding when the recession is over, exclusively telling us it could take more than a year yet. And we'll tell you all about GM's new plan to return to profit by selling cars on eBay. Stay tuned for that.
RCM, a company of Allianz Global Investors, is a recognized market leader in global funds management, dedicated to providing investment solutions built on our information advantage. RCM Investment Solutions, with consistency, stability, and superior performance. RCM. RCM Informed.
Thailand is like a paradise. The people are great, the food is great, it's a beautiful country.
Amazing country with Asian hospitality.
Lots to see, lots to do, lots to eat, lots of everything.
And very affordable. 我觉得首先是很漂亮，然后呢，人民呢都很友善的，非常的就是对我们也非常的友善和好。
I like shopping here in Thailand more than anywhere else in the world, maybe.
Feel very secure, very safe.
That's what we can totally relax when we're traveling here, so that's nice. Come here, you will love it.
this administration is going to do something on energy, you're going to have legislation this year that will be, it will be the blueprint for the next 50 years. We have not had an energy plan in America for 40 years. Now I think you're going to have an energy plan. That's good. We need it.
T. Boone Pickens there discussing America's energy strategies. And we'll be talking green energy in the second hour of Global Connection, so do stay tuned for that one. Now, it seems everyone's got an opinion about how long it will take the U.S. to recover from the financial crisis. But today, the official arbiter of such matters says it could take more than a year to declare the recession over. The National Bureau of Economic Research says there's a risk that recent signs of stabilization will prove short-lived. We'll soon find out if U.S. policymakers share that view. The Fed's two-day meeting kicks off today, and a statement is due out tomorrow. Now, Bank of America's legal woes refuse to go away. A federal judge won't approve the lender's $33 million settlement with regulators. U.S. District Judge Jed Rakoff says the amount is not appropriate if Bank of America really did lie about billions in bonus payments when it bought Merrill Lynch. And another acquisition is also proving costly for the bank. Bank of America bought Countrywide Financial back in January. It's now agreed to pay the mortgage lender's employees $55 million to settle a class action lawsuit. Workers accused Countrywide of misleading them about its financial health and causing the value of their pension plans to drop. And finally, GM has a new plan to return to profit, selling cars on eBay. Some of its brands will be available on the website for a month, starting today. GM hopes the new outlet will boost sales as it slashes its U.S. dealership count by more than 40%. All right, we're switching our focus back to China now and some economic data which might tell us more about the state of the nation's recovery. Kathy?
Yeah, you did. It's been pretty mixed signals from the country so far this week. We've seen exports fall for a 9th straight month. Industrial output picked up, but not as fast as forecast, and consumer and producer prices have dropped. Our next guest expects a gradual policy shift in China. Let's cross over to the Hong Kong newsroom, where Qing Wang is standing by. He's chief economist for Greater China at Morgan Stanley Asia. Good to have you with us, Qing. What do you make of the data so far? It's showing mixed signals here. Industrial output is up, but not as fast as forecast. Consumer prices are down, but we're seeing exports continue to fall.
Well, this is a fairly benign set of data suggesting that consumption, production show marginal improvement, but investment slowed from very rapid growth. At the same time, deflation persists. This suggests that we have a more favorable mix of driver growth. At the same time, deflation and decline of investment growth suggests that the fear of imminent policy tightening is unwarranted.
So what sort of implications are we seeing here? I mean, with exports still weak and output not picking up so fast, consumer prices falling, what is the chance of a delay in this major policy shift? Because I know that you're expecting rate hikes to start from the middle of next year.
What we are seeing today in China is the policy-driven recovery and mostly the domestic demand. The external demand remain very weak. This is why we expect only very gradual policy shift. Currently, the fear of policy tightening may have weighed on the market sentiment, but I think some investors have confused between two important concepts. That is the end of easing and beginning of tightening. I think there should be a large gap between end of easing and beginning of tightening. Any policy shift in China should be gradual, should be in responding to gradual improvement in economic fundamentals.
Qing, but what is the biggest risk now to China's continued growth? Is it external because of exports or domestic? Because the policymakers are now busily wrestling how to avert a property and stock bubble, as well as bad loans because of that surge in bank credit.
Well, the asset prices has had a very impressive performance so far this year, driven by expectation of a strong or sustained recovery, which helped by the policy. So far, we think the performance of the asset prices are broadly in line with the economic fundamentals, and in fact we observe kind of policy-driven decoupling. Going forward, if the corporate bottom line earnings can confirm this decoupling thesis, we expect further upside of asset prices. The key risk is related to external demand. If a global economy, especially in the G3 economy, turn out to be much worse than expected, I think that's the key downside risk at the current juncture.
And as we go into this transition between loose monetary policy to tightening, what can we expect from the central bank as it fine-tunes those measures to guard against any potential asset bubbles?
I think the central bank will pay very close attention to underlying economic fundamentals, especially export growth and inflation. Asset price inflation is a factor, but it is not the most important objective. And at current juncture, in our view, the asset price performance so far is in line with economic fundamentals.
Okay, Qing, it's good to have you with us. Thank you so much for joining us. Qing Wang of Morgan Stanley Asia in Hong Kong. And coming up, we shift the focus to Europe, and the papers are reporting that a long-sought takeover deal between two UK insurers may soon become a reality.
That's right, Kathy. The Times this morning says Friends Provident is ready to recommend a third takeover offer from Resolution. I'll bring you those details in just a moment's time. Plus, we have more for you. Recovery is compounded in Britain's housing market as more and more estate agents are actually starting to see a rebound, a broader rebound. Get more on that and the rise in retail sales